dear friends, welcome to Top Education. In this session we are doing CA Corporate Accountancy Chapter 2 Profit Period to Incorporation. So here this is what you have some different things, but this chapter is very easy if you understand. Okay? So here guys, what happened is in the introduction also see from the date of the purchase business, date of incorporation and date of the financial year, end of the financial year. This is the starting of the financial year, this is the ending of the financial year, and this is when the incorporation is started. When they get the incorporation certificate, then this that date is included here. And public company also, where these things, three things are same, private and public. But here in public also we have to get one more certificate, no, certificate of incorporation. As we studied in our first sem, corporate accountancy, for private company they will get only one certificate, that is certificate of incorporation, and they can start. But here for the public company they need two certificates, that is the certificate of incorporation and the certificate of commencement. So this both certificate they need. For here will not have something difference here and all. Okay, so here there are some methods also to do this and all. Finding out profit up to date of incorporation, up to the date of incorporation and all. So you will use here time ratio, turnover method. Okay, so here we will have time ratio and sales ratio. We have to find out these two ratios, and then we have to divide the other things. What you will divide, how you will divide, on the what basis you will allocate, those things we'll learn here. So allocation of expenses, gross profit or gross loss. If there is gross profit or gross loss, what you will do is on the basis of turnover in the respective period. On the basis of respective period you will divide it, both the period. Okay, I will show you a good example also while doing the sums and all. On the basis of the cost of goods sold. So cost of goods sold also we can take down if they have not given the sales. So here we are talking about all is sales. Okay, if sales is there we can do this and all. If sales is not there, then gross profit, COGS, cost of goods sold we can take. And then if there is also not this COGS, on the basis of time in the respective periods and the absence of any information regarding to turnover or the cost of goods sold. If the turnover is also not there, if the cost of goods sold is also not there, then we will use the time ratio as what? Sales ratio. Okay, so here variable expenses linked with turnover. For example, carriage, inward, carriage outward, selling and distribution expenses, commission to selling, all regarding to selling. Even discount allowed, discount received will be based on the sales ratio. This all things. Bad debts and actual bad debts for the two periods are not given. Then brokerage, sales promotion, advertisement, everything will be done on the sales. Now time period, for example we are paying monthly basis, so rent, insurance, we are getting this also, profit also. See here, salaries, office and administration expenses, rent, rates and taxes, printing and stationery, telephone, telegram, and we have postage, depreciation, miscellaneous expenses. This all are counted in the time ratio. Okay, next we have see there are many columns also. Then we have expenses exclusively related to post incorporation. Post incorporation means after incorporation, after starting of our business. So here what all will come here is the formation expenses, interest on debenture, directors fees, directors remuneration, preliminary expenses, share issued expenses, underwriting commission, discount on issue of security. See, discount on issue of securities ಇದ್ರೆ ಮಾತ್ರ ಪೋಸ್ಟ್ ಹೋಗುತ್ತೆ. If discount received, discount allowed will go to sales ratio. Understood? Next, audit fees, those all will be in the post only, but you have to see according, like, it should be familiar to incorporation stage also. Then interest on purchase consideration to one vendor, where for the period of date of acquisition of business to the date of incorporation, from starting 1/4/2019 to 1/6/2019, what are the expenses done by vendor that we are charging in the pre, okay, for the period from the date from the incorporation to the end 31st/3/2013, that we will add in the charge to post incorporation period. Post pre ಮುಂಚೆ, ಪೋಸ್ಟ್ ಆಫ್ಟರ್. ಮುಂಚೆ ಅಂದರೆ ಇಲ್ಲಿ ಏನಾಯ್ತಂದ್ರೆ ನಾವು ಬಿಸ್ನೆಸ್ ಇನ್ನೂ ಸ್ಟಾರ್ಟ್ ಮಾಡಿಲ್ಲ, ಅದೆಲ್ಲ ಸರ್ಟಿಫಿಕೇಟ್ ಎಲ್ಲ ನಮಗೆ ಬೇಕು, ಅದಿನ್ನೂ ಸಿಕ್ಕಿಲ್ಲ ನಮಗೆ, ಅದಕ್ಕೆಲ್ಲ ಎಕ್ಸ್ಪೆನ್ಸಸ್ಸು ಆಗತ್ತೆ ಅಲ್ವಾ, ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಆಗ್ತಾ ಇದೆ ಫಸ್ಟ್ ಆಲ್ಸೋ. ಸೊ ದೋಸ್ ಆಲ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ವಿಲ್ ಕಮ್ ಇನ್ ಪ್ರೀ. ಇವಾಗ ಸರ್ಟಿಫಿಕೇಟ್ ಸಿಕ್ತು ನಮಗೆ ಇನ್ಕಾರ್ಪೊರೇಷನ್ದು, ನಾವು ಬಿಸ್ನೆಸ್ ಸ್ಟಾರ್ಟ್ ಮಾಡಿದ್ದೀವಿ, ಅದು ಎಲ್ಲ ಎಕ್ಸ್ಪೆನ್ಸಸ್ಸು ಪೋಸ್ಟಲ್ಲಿ ಹೋಗುತ್ತೆ. ಅರ್ಥ ಆಯ್ತಾ? ವೆರಿ ಗುಡ್. ಓಕೆ.